Okay, so Kaylin has a think or swim question. Yes, ma'am.
So I'm trying to figure out how to use these different trades like the vertical and the iron condor and
Hmm.
stuff and not use up like a significant amount of buying power.
Hmm.
So it might be easier if I can I'm just going to share my screen real fast.
Yeah,
That's
let me
okay.
fix it where you can. Okay, should be able to go. I love it. A think or swim question. Hey, Kaylin, were you in my earlier class today?
I was,
Yeah, cool.
and yeah, I was a little confused, but I feel like eventually I'll stop being confused.
2 weeks. If you'll stay with it for 2 weeks, you won't be confused because I do the same thing every day.
Okay.
Every day.
So I turned it to vertical,
Hmm.
and if I am I reading this right? Like at the end of this week, this particular setup would cost me $1 of
In
buying
buying
power,
power. Uh-huh.
but I would make 97.70.
Yep, your credit that you receive is 97.70 in selling this particular vertical. Now, I will tell you this, okay, just from experience, it is tough to make money on a $1 vertical. So, what I normally like to do is take more risk. So, I would spread that out to a $3 vertical, right? So maybe sell the
Of this.
421, 424 and buy the 421. And then what you're wanting to do is this. The the research is that the optimal credit for a $3 spread is one third the width of the strikes. So if you have a $3 wide strike, you want to collect $1 for that, around $1. So you would be risking $3, or actually your loss would be $2 to make $1.
So this strike I need to change to 25.
Let's see. You could try that. So 425, sell the 425 and buy the 422. Wait a minute. You're doing yeah, we're on the put. So you're selling the 425, the 422. So see, that's a $3 wide strike, but you're receiving $3. So you are too close to the money. You're selling an in the money spread. So you want to sell something that's out of the money. So you want your strikes to be less than the 413 where SPY is.
So I need to come down this direction.
Yep. So let's see. So then you could look for something that's $1. So come back this way. Let's see. Well, those are one strike wides, right? Vertical. Go back to spread where it says vertical on the left. Go up at the top, right there, vertical, and do vertical. Go down to deep and wide at the bottom, and then go 1 month, 3 strikes at the top, and then go vertical. Yeah, there you go. So that's showing $3 wide strikes. So you see, you could sell so you're wanting on a $3 wide, you want to collect about $1. So you would go closer to the money, go closer and do that when this for 83 cents there or the $1.04. There you go. Mm-hmm. So then you're collecting 84-cent credit. So hit the confirm and send button. So that's going to be $216 in buying power. You're collecting a credit of $82. Good. Yeah. That's more like what you would want to do, selling out of the money spread.
Okay. All
Did I
right. I
confuse
think
you?
no, I think I'm just confused all the way around.
And you know what the best thing to do is and now here's the thing too. Notice that you're selling a 3 day option. So this thing expires in 3 days, right?
Yeah.
So more realistic, what you want to do is move out to about 45 days, which is kind of
Well, I did that, and I've got a hot mess going on.
what you got going on over
I
here.
don't know. I started doing things, and that's when I got confused. I thought that when I sold this put that I was making money, but
Mhm.
that's losing money, right?
Yeah. So what you did is you sold the 430 put. So that was an in the money put, right? So you want to sell things that are out of the money.
So
So
then I
you're
tried
just
to close some, and yeah. I think this one I got assigned on. Am I
uh-huh.
supposed to close it before expiration?
Well, unless you want to take assignment of it. So now what you do, now that you've taken assignment of it, you sell calls against it, right? So it looks
That's
like
what
you
this
do have a
is,
call.
right?
Yeah. So that's a covered call where you actually own the stock and you sell a call against it. Isn't that cool? So you're in
Okay.
the wheel. So if it gets called away, then what you can do is you sell a put. And if your put, you get put stock, then you sell a call against it again. You just keep that wheel going. Just keep collecting that income.
Okay.
So this is the great way. This is what you're doing, Kaylin, is so fabulous because this is how you learn, right? So even though you got a hot mess going on, learn from it, right? And don't worry about, oh God, I just did that wrong. I got to close it. Don't worry about all that. Just kind of monitor what you're doing, sell out of the money, premium, collect it. If you get a sign, then sell calls against it.
I've used the same thing with the iron condor, and I
Mm-hmm.
ended up with all these things right here, I think.
Mm-hmm.
And now I can't tell, like, these are just, I can't tell what's happening anymore.
So an iron condor is a uh, selling a put credit spread vertical, put vertical, and simultaneously selling a call vertical. So let's do this. Let's go. We want you to be able to show your orders, and that'll be easier. Let me see how I've got mine done. So let me share my screen and I'll show you how my orders are shared. And when you do your orders, that way you can keep everything separated by your order because you did that as a single order. So let me share my screen. Look at you doing all this option stuff, though. This is good.
I told my husband I want to quit my job, so I'm learning.
You got to learn, right? That's exactly right. Like we said today, I've got Bernie Madoff numbers for the year, right? I am the Bernie Madoff, except mine are actually real. So here's
Okay,
what
I'll
I
take
do.
4%.
So yeah, 4% is great. So I go over here, right? And I show group. See, this says group women arrange positions by order. Okay, so I want to show you that again. Go up here to the top where this little clipboard thing is, and you want to arrange your positions by order. So everything that you put in as a single order will be shown separately.
Okay.
Okay,
How
does
do I
that
make them go away if they're not doing anything?
go away?
Yeah.
Well, you to make them go away, you would need to close the position, right, to get them off your order screen here.
So once it's closed, it should just disappear.
Yeah, it'll disappear
Okay.
once it closes or it's expired. But that's really good, and that's a lofty goal, right? Is to say, look, I want to learn to trade for income. I want to tell you something, and I'm not that good at it, right? So I do the longer term things. I like selling things that are about 60 days out. But one of the best traders that I know will routinely, I mean, effortlessly, he is so good at reading the charts. He's a day trader, and I used to day trade, right? I was just, he consistently makes $3,000 a day. So he just does, and I mean I've seen him do it. It's incredible. So you sitting there he's making 3,000 a day at least times 5 days. He's making $15,000 a week, and all he does is day trades the Nasdaq. And so what he does is he's extraordinarily good with reading the charts, and he uses a couple of technical indicators, kind of similar to what I use on my chart here. He uses this type of 2-minute charts. And I mean, he knows. I mean, you can see today. Look at this. It happens over and over, right? It goes from here to here, goes from here to here, goes here to here. 80% of days are what we call range days, where price is in a really tight range. And he's so good at going, okay, it gets here. There's VWAP, value added average price. When it hits VWAP, it's going to go back down. And so he'll short it. He'll pick up a couple points there. He'll wait till it comes back down to the next logical point of support, and then he'll buy it, and he'll just do this over and over and over and over. And 80% of the days that works fine. 20% of the days we have what is called a trend day. And a trend day is the market starts going up or down, and it continues in that direction for the majority of the day. But like I say, the majority of days are what we call range days. You know, you have ups and downs and ups and downs and ups and downs. And he just trades that day in, day out. Sits there at his computer, and then he'll be like, okay, I got to go. You know, I got to take the kids to whatever or do whatever. And, you know, it's a great little life. So I did that too for a while, right? And it would be so great. I'd be like, Beth, oh my God, you won't believe this. I made like $1,000 today. And then the next day I'd be like, I wouldn't talk to her. And she'd be, what's wrong? I lost a little bit. How much? $3,200. You lost $3,200? You know, so it'd be that kind of thing. And so it affected my psyche. It affected my relationships with my family when I was a day trader. So now my trading is done in about a 15-minute window. I could do all my trading, update my spreadsheets and everything in about 15 minutes, and I'm done. And I don't even
That's
look.
about how long it took you today.
Yeah, it's about how long it took me today, right? And I did that in how many accounts? 3. So I run a number of accounts. It takes me no time at all to trade my account, get it done, because what I do is very simple. I sell options premium. I allow the options to decay, and I receive theta. The theta decays. So I manage chaos, and I rinse and repeat. And that's all I do over and over and over and over and over again. And it seems so simple. So what you were doing today and you watched in that session, you're like, oh my God, this is extraordinary. And so what most people do is they give up. And I'm telling you, if you'll watch me do it for 2 weeks, you'll be an old pro and you'll be like, oh my God, this is the same thing over and over and over. The rinse and repeat is the fun part. Now, on 5% of trading days, so about 15 days a year, you're going to experience incredible volatility. You're going to experience drawdowns in your account, and you have to manage around the drawdowns. But 95% of the trading days is printing money. How many days do you see? If you'll watch my thing, I play the Jeffersons theme song from most of y'all probably don't remember it, but the Jeffersons, George Jefferson, I play moving on up, you know, because my account goes up and up and up and up and up just most of the days. It's those 5% of days where I go, whoa, we got a little, because I was up as high as 9.65% this year. So when the increased volatility went up, I puked a couple of my positions. I didn't manage them well. I've admitted my mistakes and realized I could have done a much better job of managing that. But I fully intend to be beating the market again very, very soon. So the market's up 7%. I'm up 4%. I anticipate overtaking the market in a very calm, collected way. So that's the great thing that you guys have. Now, let me tell you this, and I want to invite y'all to this. And I know, look, you guys are college students. Y'all, a lot of your parents, y'all got stuff. A lot of you, you know, like Isabel, she's in Alaska. You couldn't come to this. But, oh, what a thing that you guys could come to if you wanted to. So we are meeting in Atlanta, okay? So we're meeting in the Westin Hotel. Now, this is a nice hotel, you know, downtown Atlanta. And I've got a link that you can make a room reservation. We're going to be there let me get the dates. We're going to be there May 11th, 12th, and 13th. So some of y'all that are in Alabama that could even drive over, you don't even have to stay in a hotel. But on the 11th, what we're doing is we're going to check into the hotel that day. That evening, we're going to Oglethorpe University, just outside of Atlanta, and Tom Sosnoff will be speaking live on entrepreneurship to a group there. So if you wanted to go to that session, email me and say, hey, look, Bobby, I'd love to go to Oglethorpe University, say, Tom, hang out with y'all, have a good time. So the next day, Friday, this is a fun day. We're going to be in this hotel in a conference room, and about 10 of us or so traders from all over the country are going to be trading live. So we'll have our laptops and we'll be trading live on the 12th, and y'all could hang with us there. You'll meet people from all over the country that are traders and do this for a living. And then on the 13th, we are going to the Bad Trader Tour that's being posted by Tom's group, Tasty Live. So a lot of people from his group will be speaking. Tom will be speaking that Saturday. And this is from 9 to 11 Eastern time. So 2 hours on Saturday. And then we're going home. So if you want to go to any of this stuff, let me know. I'll send you the links to sign up. If you wanted the hotel, or if you just want to go to this, or if you just want to go to the Oglethorpe University on the 11th, we'd love to have y'all go. It'd be so fun. So fun. So if anybody wants to go to that, y'all come on over. Okay. Any questions about that at all? God, that would be so fun to see some of y'all. I love going down to Tuscaloosa. We didn't able to do it this time to see some people that are in Tuscaloosa, but it'd be great to see anybody. Hey, who would mind sharing their financial plan? Now, I know some of y'all's got numbers on it too, right? So Katie, she blocked hers out. So that was good. She's like, listen, you fat, black, glass wearing son of a gun, you're not going to see my stuff. I know, yeah, she's very private. So that's fine. So does anybody want to share? I could pull it up if you don't have it handy. Anybody mind sharing their financial plan? And we're assuming all numbers are made up, by the way. Oh, what is wrong with y'all?
You can share mine.
Oh, Isabel, look at you. Let's go find Isabel. Let's see if I can find Isabel. I hate y'all seeing each other's grades and stuff. Where's Isabel? Isabel. Here we go. So she made 100 on hers. Let's see if we can view it here. View grade details. Let's see. View attempt. I think I can get it here. Here we go. Let's talk about your final exam. I love it that y'all got your own little trading plans. Y'all are going to be, you know, the Warren Buffetts of, come here, open when done. Oh, it must be a big file or something. Let's see if we can get it here. All right, Isabel, how was your experience with putting your plan together? Look at here. Everybody see that? I like the little piggy. All right, Isabel, take us through it.
So don't mind my little dog because he'll start barking.
No, it
sometime.
doesn't bother me. My wife starts barking downstairs sometimes too, so y'all excuse her.
I tried to do the whole Canva thing, but I couldn't get it to come up. So I just did mine on Word. But
I like it.
So I've always tried to live below my means. So
Mhm.
that was kind of the philosophy that I went through.
I love it.
And then my risk tolerance, I'm a little frightened just because I don't know it. But I think once I get my feet wet and, you know, just dive in, I'll get more comfortable. And then especially with watching you on the Trading Nerds and staying in touch with y'all, I think that will get me more comfortable as well. And then my assets and allocations, I think I'm going to stay with 70 and 30 for now, just because it's something comfortable.
And what is that 30% other? What is that?
I think it's just going to be like savings, like regular savings accounts, maybe like stocks and bond, like the bonds that National Ed was talking us through.
Mm-hmm.
I think I'll probably do that part of it, and then
Okay.
Then I think there's like some I'm not really sure about on my 401k if it's it just shows it kind of like not very I'm not sure. I just put 30 because I don't want it to be like full on lose all my money all in one day.
Gotcha.
I wanted to save a little bit on the side.
Gotcha.
And then the contributions, I've already got 10% of whatever I make go into my 401k plan.
Good. Beautiful.
And then 10% always goes into my emergency fund. So
Mhm.
I never see that, like it already automatically goes as an allotment into my savings account. And then every time I get paid, whatever is left in my balance. So I normally like whatever I have several different accounts. So I move on the first of the month, I always move X amount of dollars to pay my bills and my house. And then whatever is left over is my money. Like I can go to dinner, I can do whatever I want. Then whatever is left over the day before I get paid, I move to my savings account.
Mhm.
So let's say I had $300 that month left over. I would move that money over before I got paid. Then, or one month I had $99, I would move those monies over to my savings account, and then I would start fresh again. So I've been doing that ever since I was like 20 something years old. So I've built my savings account pretty well,
Good.
just doing that part. And I'm always chasing savings account rates. So I'll go on NerdWallet and I'll look and see what highest savings account rating there are. So right now my savings account bank is CIT Bank, which is earning me 4.5% or close to it in just interest. So most of my savings is in there. I do have just a tiny savings account that's in my USAA account, but it's really just a holding savings account. So once it reaches a certain amount, then I'll transfer it over to CIT Bank. And then I rebalance and review. So as I get more comfortable, like I said before, with those trading options and watching you and your team, I think I'll be able to make more money doing that. And then, so all of this part down here, right now in my Fidelity account, there's about $21,000 in there. And it's showing FFOLX, which I'm assuming that's something kind of like the S&P 500, but it's just for Fidelity side. And apparently I own 638.89 shares in there. I own Cullen and Frost shares, which that was from my old bank, or yeah, that was my old bank that I used to work for in Texas. And I own 78 or 79.256 shares in that. And then I used to work for North Face, and they had a 401k plan, and I was contributing to that as well. But when I quit, they rolled it over to an IRA because I didn't do anything with it. So they rolled it over, and I had $2,644.32 in that. And apparently I own whatever that FDRXX is. I own 2,644.32 shares of that.
And what is the FDRXX?
I'm not really sure.
I would check on those, right? Double check that FFOLX and the FDR XX and see if that's ultimately exactly what you want to be in, right? I would check those. Another thing I would tell you is, on that interest rate, the 4.5, you may want to check into the Treasury bills that are paying over 5% interest, particularly for a year or even shorter, paying over that. So you could maybe up that. But yeah, really good plan. Any questions or comments on Isabel's plan? Thank you for sharing, Isabel.
You're welcome.
Anybody else want to share? I don't want to force you to. I'm not going to sit here and do it. Caitlin, yours was really colorful, wasn't it? You don't want to share yours?
I can share mine. It doesn't have a lot of words and numbers.
Yeah, let me say, yeah, yours was a lot of pictures, I think, right?
It was. Yeah,
Let's see if I can-
pictures make my brain work. Words make my brain hurt.
Seems like it was florally, like I can't remember. I've got everything graded that y'all have done, so I'm up to date on my grade. Let's see, where's Kaylin at? Let's see here. I hate y'all seeing everybody's grades here. Kaylin, where did I see Kaylin at?
R.
Yes. Huh?
R. Roma. There it
There you
is.
go. All right, so let's check this out. View grade details. Okay. Electric Ladyland. I like that. Oh, look at this.
So that's the holding company that I started.
Yeah, you are the entrepreneur. I like it.
Yeah.
Yeah. So talk us through this. We got some
Right.
steps and everything.
So it's kind of shaped like a clock or a wheel or whatever.
Mhm.
So Urban Fusion, the reason that's in a picture and not a cartoon is because that was my husband and my old business.
Mhm.
We started that like 10 years ago. And then we moved from Alabama. He joined the Navy, and so we had to close it. But now that's kind of where it puts me into step one. We're reinventing the wheel, reinventing, how our finances are set up, what our life's going to look like now that we are in the Navy and kind of bouncing around. My step two is fill up the baskets. So that's basically where I'm trying to get to the point where he can contribute all of his paycheck to like TSP, or at least max out the annual amount, and then max out like our annual IRA amount.
And is he doing the C fund pretty much exclusively? Do you know what he's doing?
Yeah, I just looked at it the other day. He's got 3 of them that he's split up. One's international, one's C fund, and I can't remember the other one.
Okay, gotcha.
But I'm kind of doing the same thing that Isabel is doing. I'm taking advantage of the high yield savings account. So that's where we keep our emergency fund. And as soon as I get it full enough, it will start making me monthly income that will pay for certain things like groceries, or it'll make enough that'll pay for, I don't know, electric bill or whatever. But kind of passive incomes that I don't have to worry about that. And then same thing, another account that's going to just keep rolling me money for like car tags or car insurance or, whatever. And then step 3 is basically once I get my little baskets full and my accounts are making me passive income, I can start moving on to other things that are no longer taking up our earned income, which would be things like my entrepreneur dreams, buying real estate, starting a financial planning and tax strategy, little business. We like travel. That's kind of our thing, is to get out of the States and just kind of bounce around from country to country. I would love to start a nonprofit foundation. With the high yield savings account that I was looking at, I was like, well, this is something that we could do with the T-bills. And if you're building a T-bill ladder, why couldn't we take the money that gets made off of that and kind of use that as the foundation for a nonprofit, something like just donating money that gets made to like a food bank or something. That was actually my daughter's idea, so I might help her with.
And the great thing about a foundation, was it in J.L. Collins' book where he said he and his wife created a nonprofit foundation for their charitable giving. So if anybody comes up to you and asks you for money and said, "Oh, listen, I would love to, but would you send a request to our foundation?" Right? So
Mhm.
you can
You got none.
take it off of you. People always asking you for money and turn it over to your foundation. So that's
Mhm.
great. Yeah.
Yeah, that's what I've actually been doing since we moved to Washington. We moved during COVID, and so it was really hard for me to kind of get back into going out to work. So I've been working with our FRG and restarting that. And this past year, I've restarted 3 PTAs, and I've gotten pretty good at it. So I feel like I could do that for a living and not just for my, volunteer eating up my time. And then, yeah, so step 4, once I get those things done, we'll kind of reevaluate and see what, we can bump up or change or what have you. But my goal is to kind of be self-sustained and quote unquote retired. We'll probably never stop working because we would go stir crazy, but just at age 50. And that's kind of just an inside joke between my husband and I don't know if you've seen Along Came Polly. That's our kind of our movie, but yeah.
So that's boss level 50. And let me tell you something. 50 is a great age to retire at. I retired at 51, and it's just so fun. I can't tell you. A lot of people think, "Oh man, I'm in my 30s, 50. I'll be just horrible. I won't even enjoy life." Let me tell you something. It's more fun now than it was in my 30s.
That's what I'm hoping for.
Oh yeah,
Kids will be gone, and we can just, do our thing and stop having to worry about what about the kids.
I'm coaching softball today for my daughter. I'm going to 2 of my kids. We're going to the Anniston Museum on Thursday with a school trip. It's just like, I don't know. It's just fun. You just do what you want to do. My kids are young, so I get to spend all my time with them. You'll love it. That's great. Yeah, and I love your entrepreneurial spirit here. Good. Any questions or comments on Kaylin's plan here? I like it. I like it a lot. Anyone else want to share? You don't have to. Not everybody at the same time. Katie, you want to share yours? Yeah.
I will if you want me to.
Yeah. You got it up, or you want to share it? Or you want me to share it?
You go ahead and share it if you like.
Okay. Let me get back. Da, 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 da. I like going through y'all's stuff. This is cool. Let's see. Where's Katie at? Find it here. Katie, there she goes. Katie's investment plan. Are y'all printing these out and putting them on your refrigerator or on your mirror or on next to your computer or somewhere? Y'all print them out, Y'all put all this work into them, all your creativity, make sure you put them up so you're reminded of them. And don't forget to reevaluate, at least once a year, go back. Is this really what I want to do? Is this, the reevaluation part is really good. And if you need to rebalance. Okay, here we go. I got it. All right, Katie, walk us through it.
So my thought, and especially the way that I work and teach different clients, is you have to buy into a process. You have to be willing to put money aside. And in doing that, you're going to figure out a way to live an enjoyable life now, but be able to continue and sustain an enjoyable life. So that's why I have that invest now for the life that you will always want, because I don't want to be earning a good amount of money and blowing it, and then come time to retire and not be able to. The objective for me is obviously serving people in a job that I really enjoy. So it's fun to see when people grasp this concept and move forward with that. And so I understand why you want us to grasp options, because it just expands that. And one day I will. But I want the ability to retire when I want. I'm 35. I tell a lot of my clients that that's probably going to be in 30 years. And there's 2 reasons for that. One, of course, 65, I'd like to push it if I can, and if I still enjoy the job. But if you'll notice, the very bottom, I put years until retirement, 25. So that's when I would like to be able to start. But if I want to work longer, I can. The second reason that I want to wait a while is the way that this job is designed is that if I build a good book of business, I can transition this to my children. But I don't want to transition a good book of business to a 23-year-old, 24-year-old kid. I want my sons to have to pursue other opportunities so that if they decide to come into doing what I'm doing, it's very similar to how I did it. I had other networks. I had other opportunities that I'd pursued to make sure that when I got here, I really enjoyed it because I tried other things. So that gives my 6-year-old and my 2-year-old, if I work for 25 to 30 more years, that gives them time to work through a life, and then us work together, and then I transition out. So that is thought behind that. Philosophy, long-term investing with consistent contributions. So of course we can all say that we want to contribute. I mean, we want to have long-term investments, but we've got to be consistent putting money in. Right now I'm more of a medium to a high risk. So I know how to be high risk and I understand that. But when I look at my money, I still have the same emotions that other people have, oh my gosh, and I know better. But I want to respect that I don't have an off the charts risk tolerance. So that is why my allocation is 85-15. Standard here would be an 80-20, but I try to push mine a little because I know I've got time ahead of me. Contributions, and that scrunched up a little more than I wanted. Fully funding my 401. Of course, I'm getting the matches there. And then I entered into the new backdoor Roth territory this year. So I didn't expect that my husband and I were going to be there. And so we've got this whole new arena that we get to play in. And there's rumblings that the government may try to shut that down. And so I need to be sure that I'm taking advantage of that while I can, so that I'm getting tax-free money.
And explain to that. So this is really good. That's a good thing to talk about. We're not really the retirement class, but tell everybody about the backdoor conversion.
Yeah. So I have 3 clients right now that are in that, and we're all in our mid to late 30s. And it's like, hey, guess what? You made it. But essentially, between the single doctor that I've got and then the other couple and me and my husband, we do not qualify anymore for Roth contributions because we made too much money. That's not fair, but that's what the government says. Great, you're successful, pay us all these taxes and you don't get the same benefits everybody else does. So I'm not bitter. But with that, and it gets very muddy and very complicated when you have someone who has money in a traditional IRA, because now you've got these pro rata formulations on taxes. But all of that aside, you have the ability to run your money through an after-tax traditional IRA, which you'll see as one of the accounts. You run your money through that like a contribution, and you're not getting a deduction, but you're basically paying the taxes, but then you get to pay the taxes to convert that to a Roth. So it's this messy way of saying, let's take a few extra steps in order to put money in a Roth IRA so that it can grow tax-free. So that's what we're going to have to do this year. And it's this career as an advisor, especially when you work in, you work for commissions, every year is different. I was off to a much better start last year, surprisingly, than I am this year. And I've shared that. I've had the wind knocked out of my sails a good little bit this spring. So we may be to the point where we do qualify based on how I perform and what's going on. But Russell also took a pay raise. So I did not include him. I like to look at all of this and say, if it's just me, what's my plan? And I know that's weird, but he is trying to fully fund his 401 as well, so that we don't run into issues with taxes. We don't run in, and we planned it very well this past year. where we're basically a wash. So I love that. Like, we don't owe, but we're not getting anything back. So great planning. The accountant was phenomenal. It's just the backdoor Roth. We didn't anticipate that. So contributions, getting it funded, getting the match, doing the backdoor Roth, making sure that we're still putting above and beyond what we can back and away. And we also contribute for our children. That's one of those that if I can max my plans and I still have the capability to do something for them, I'm going to.
And I know we've talked about it before, but everybody, please max your plans out first before you do something for the children.
Right.
Because we don't want them having to wipe your butt when you're 90 years old, right?
Right.
Okay.
And
ahead,
I'm
Kate.
adamant about that too. Like I tell my mom all the time, I will not be your caregiver. I won't
No.
do it. And I've seen that too much with my mom doing that for her mother-in-law and for her grandmother, and my granddaddy doing that for his wife, that it wrecks your own health. So I'm not doing it. And my mother knows that. She knows it. My mother-in-law had better grasp that fact, because it's not us. And that's on her. But
And that's the best thing you can do for your kid, right? Is to do
sure,
that rather than funding their education. It's better to make sure that they don't have to take care of you when you're old.
right. I would rather my boys come out of school in debt and me have this business going crazy and being able to walk away from it when I want to, so that they can step in and have an income that most 30-year-olds won't ever see. That's what I'd like to do. But for my reviews, I do, whenever Rhett gets money from, he gets money from like the stupid Easter Bunny. That's not us. She's not stupid. It's my mother-in-law. Thank you for encouraging all of this extra money. But we put it into the plan. So then I'm inside my accounts looking at it, because I'm putting $20 into his UTMA and I'm having to invest that for him. So while I look into his account, I just do a quick sweep on mine. Okay, we're great. So I review more than semi-annually, but I've got to make that conscious effort to say, okay, we're going to review it twice a year. And I really my husband is the worst client I have, but I've got to get to the point where he realizes he has to sit down in this chair across from me the same way that all my other clients do, because if he doesn't, then he's not holding up his end of the deal. And so that's where, if we're rebalancing annually and he knows, then he's involved as well. And that makes me involved for myself, because I want to serve others. I have to realize I am an other when it comes to the accounts in this branch. Beginning numbers, that's there. Matching the 401k, that's the 2023 number. I get about a 7% match, and that starts to go up. And when we first started, we had an automatic roll up on the 401. So they would start us automatically at 3%. The following year, you were automatically at 4%, automatically at 5%. And so by your 7th year, you're at 10%, regardless of what you want, unless you change it yourself. So that's something to consider with your own 401s. Do you have an auto roll up? But we're maxing backdoor Roth. There we go. Projected balance. And it's going to be more than the first one. And then years in retirement. And then those are the accounts that I have to watch, because I did. Fortunately, I got my Roth when I was in pharma. I had an 8% match from a company, but I got to put my money into a Roth. So it was really nice to be able to build that up very quick. And I do have a Roth option in my 401k, which is great considering I can't do it myself.
Yes, the Roth 401k is excellent. And I was able to contribute to that for the last few years when I worked with the government. So, yeah, it's really good. They're adding that a lot more now. So great plan. Do all of you kind of now feel like that you're going to have the FU money that we talked about at the beginning of the course? I think you should, right? Everybody should have that feeling like, hey, this is doable. It was so great to speak to that high school class the other day. And I think I told you, the little girl said, I want to be an elementary school teacher, but I can't because I won't have enough money. And I walked her through it. And we had her upwards of $2 to $2.6 million. And her mouth was just, wide open going, whoa, what? I can actually do that on a average salary without ever getting a raise. We had her up at $2.6 million.
I had a class that I talked to Friday, and I shared your story with them. And I was just like, hey guys, I took time out of my day to be here, and y'all can decide to listen to me or not. Two of you will. And
Yeah.
I'm gonna hopefully change your life. And the rest of you, when you come back to your 20-year reunion, you'll be like, well, I had the opportunity. And then I had a couple that like got on their phone. And I was like, you can at least turn your phone off. Like, you don't have to listen to me, but you're not going to sit here on your phone because I'm not making money today because I'm teaching you something. And they were like, yes, ma'am.
It doesn't matter. You can't, you lead a horse to water, but you can't make him
Right.
drink. And it's amazing that bell curve, is it really is the thing. But I feel like in our little class here, now, that you guys are a small portion of the class, right? The ones of you who come to class and the live session, you're a very small part of our overall class, but it's unusual that everybody is doing so well. Everybody's participating in the assignments, which has been really, really, really awesome. So I don't think we're going to have any Fs in this class. And I normally have 2 to 3 Fs in the class. And I'm like, how do you make an F in the class? You just don't do the work, right? You don't do the stuff. And I know when people are bull crapping me, and they give me a 1-sentence this or that. But I think that you guys, especially that are here and committed, I think all of you are going to have the FU money for sure. So, Shannon, Nick, is there anything y'all want to share? You don't have to. I don't. You can if you want to or not. Yay, nay. Thumbs up, thumbs down. So, Isabel, she's scared a little bit. She's a wee bit on the conservative side, and that's good. But I wanted to show you guys this. We are just a tiny speck in the universe. Still, we only think about I, me, and myself. Now, who knows if this is right, but this is apparently the universe. And here we are, right there. Little bitty speck. Little bitty speck. And you think about that little bitty speck, and you think about all the stuff that we worry about, and you look at this awesome universe, and you go, well, just a little bitty speck. And the cool thing is we're all going to be dead probably within 100 years unless they're able to put our brains in some type of artificial intelligence robot or something, whatever. But the chances are that, we're all getting out of here. We're not making it out, right? But we're just a little bit speck. So I think our overriding theme in our class this year has been that you guys need to take risk. You're going to die. You have an expiration date. We all are milk sitting on the shelf, ready to be clabbered and ruined unless we put ourselves into something that is more useful, like a glass of coffee or a cake or a pie. We have an expiration date. So I want you to do something with the time that you have. And I want you to take risk. I want you to be entrepreneurial. I want you to invest in real estate. I want you to invest in financial markets. I want you to spread out and to diversify into different things and to have the FU money so that you can eventually lead the life that others wish they could lead. So you are your own brand. And Nick, I don't know if it was you or someone that brought up one of the things about the class and investing in yourself is whoever, it may be Nick or someone else that said, we are a brand and we have to protect the integrity of our brand. And that means from your credit report, we talked about investing in yourself, keeping a great credit score, a credit report, which is your online reputation, making that as clean as possible because that is your brand. We don't want you going into debt for cars. We don't want you to going in debt for televisions and things that go down in value. We do want you going into debt to expand your business. We want you to go into debt and leverage in order to expand your real estate empire. That's fine. But for things that go in value, down in value, it's just not that important, and it will derail your financial future. Debt is the one thing that will set aside all your plans and run you off the rails. So be careful of that. Be careful of your online presence, who you are, what you project to the world. You are a brand. and you protect that brand. But at the same time, your brand is so small as far as the universe goes, but it's so big as far as the opportunities that you guys have in life. So protect your brand, invest, go out, pursue your dreams. You know, the worst thing that I've ever heard somebody say is this: I'd love to be a doctor, but that's going to take me 13 years or whatever. You know, and I'm sitting there going, you don't realize you're going to be alive doing other things or wasting time in that 13 years. Pursue those dreams, go after those dreams, and most importantly, help others to pursue their dreams, right? And that's something that Katie's doing right now in her business. She's able to help others to pursue their dreams. So go after the big things in life. Go after the big things. Take care of the little things, but go after the big things. Okay. So a couple of other things that we've covered in the course are this: money can't buy happiness, but the lack of it can sure make you miserable. And I think we've got everybody, fortunately, on a great path that if you will do these simple things, it's incredibly simple. It's just not easy. But if you will do these simple little things that we talked about, spreading your risk out over 500 or 1,000 stocks rather than concentrating on 5 or 6, whereas you've got money just sitting in a savings account that's getting pennies on the dollar, you know, advancing that into I bonds or doing something with treasury bills. You've got the plan. You've got the blueprint. You've got everything you need to create the FU money that you deserve. So with that said, I want to turn you loose on the world. So this will be our last live session. We will have no more live classes. I have I'm going on a field trip on Thursday. We were going to do a live class then, but I'm going on a field trip with my kids. And then the following week, I want you guys to be able to catch up on any readings or work that you have and to have everything done. Now, remember, the most important date, I can't go any day, any time past this. Everything has to be submitted by April the 30th by 11:59 p.m. Okay. And even if it's after 11:59, I mean, when I wake up the next morning, that's when I'm going to grade everything. So it's got to be ready for me to put in by May 1st. Our questions, comments, takeaways.
I'm just a little stunned that today's the last day.
Today is the last day. It's just the last day. You guys have made it. You have made it through. You have persevered. You have done it. And I think I've given you everything that I possibly can. I was thinking, is there anything else that I could tell them today? You know, maybe I could tell them how to buy crude oil futures or gold futures. You know, I could probably do that. But I will say, if you want to still keep in touch with options, every one of you, a couple of you are in my Discord room, but for all of my students, I give you access to my Discord room and I post a link daily and we trade live daily at noon Eastern time, 11 Central. So you're always welcome to come in there and trade along with us and keep in touch. Isabel is sending me a postcard from Alaska and I'm excited about that. So it's kind of cool that I said, oh, my kids will love that. So getting a postcard in the mail. So y'all keep in touch. And remember, I told you that I am hooked to you for life. So, you know, friend me on Facebook. Y'all keep in touch. I love keeping in touch with all my students and we'll be partners for life. Kaylin, do you need to say something? Yes.
I have a question. I haven't looked, but I also haven't seen one. Could we make like a guppies group in the Discord for like newbie questions so they're not going in with like the
Oh, I like
experts
that.
who are like, oh,
Yeah.
why are these stupid questions in here?
Yeah, I like that. Guppies. I like that. As a matter of fact, I coached my daughter's T-ball team, and that was our name, the Guppies. So, you know, start here. But I want you in that Discord group. Yes, there are some great traders, right? And I've created a think tank of people, and we brainstorm all these crazy ideas. But don't feel that any question is ever stupid, right? It's we just want you to learn. And I'm glad, Kaylin, that you're in you were in the daily session today and you want to learn to trade. And it's just so fun. I like it so much better than real estate because I don't have to deal with anybody. I can do it with my screen. I can do it beside the beach as long as I've got an internet connection and a phone. It's just so fun. But yes, I will do that. I'll create a little guppies room. Beginner guppies. All right. Anyone else got anything else? All right, wonderful. Well, I have enjoyed having you in my class. And like I say, we're attached to the hip from now on. So y'all keep doing it. There is a evaluation for the course. If you would complete that, please. That's very helpful to the university so that they know whether you got something out of the course. And I will see y'all sometime in the future. Kaylin, I may see you tomorrow, right? In the room. So y'all come on in. All right, guys. Bye-bye. Y'all
Bye,
be good.
everyone.